actually seen banks tighten their lending conditions, especially to corporates, over the course of the last few months. I think it was around about 40% of banks were considering tightening conditions to both small and large enterprise borrowers. And we're seeing that filter through slowly to households as well. Banks lend a lot when interest rates were very low. We've seen that in terms of the large portfolios of low-priced bonds, and those need to be rolled over and replaced. So I think there'll still be some appetite to lend and now have loans with 6% interest paid rather than 2%. But we're also likely to see a slowdown in demand for credit. And that's the finally trickling through of monetary policy tightening over the last year, where households especially, but some businesses as well, are thinking, okay, we need to rationalize, borrow less, spend less. That will also hit the other side of the equation.
So in terms of the list of priorities for our audience, what do they need to worry about first and last here? Because we've got the debt ceiling discussions, we've obviously got the direction of interest rates and the lag effect now starting to bite. We can see that in the data. And then there's this worry about where your money is deposited, and apparently Americans are more worried now than they have been since the financial crisis of '08. So in terms of market priorities, which of these things do you think we need to worry about the most?
Yeah, it's a worrying list, no doubt. I would have to say the debt ceiling must come first. We got an X date from Janet Yellen, the Treasury Secretary, earlier this week of June 1st. Now, there have been some earlier estimates a couple of months ago that X date where the U.S. won't be able to pay all of its bills in full could be July, could be August. It's now June 1st. It's not pinpointed again. We could see some shuffling around, but it probably will only be a few days away from that estimated date. That's incredibly close. And actually, in reality, Congress only has a couple of weeks in session before that June 1st date in which to reach an agreement, and we've not seen any real movement towards a deal, besides the fact that at least both parties are talking, which is more than we could say a month ago, but we're not close to an agreement, and it's got to be a real coming together. They're digging into very separate positions. The Biden administration wants no conditions with the debt ceiling increase. Republicans want deep spending cuts that will reverberate across the economy, as we're already heading into a slowdown, as we've noted already. So this is going to be very difficult to achieve, and the consequences of a potential default, even if only for a couple of days, are really big.